It's unclear where the breaking point is, but gasoline underpins much of the economy from transportation to travel to production and construction, and also guides a significant amount of consumer behavior as well as inflation expectations, which can have even more damaging consequences on the economy outlook. Many see trouble in store for fuel prices continuing to rise. Really? Or to stay at these elevated levels for extended period of time. So Janet Yellen said on Thursday that there's nothing to suggest that recession is in the works, after admitting last week that she was wrong about the transitory or trajectory of inflation by using the word transitory as we come down here and retest the lows here. Okay, let's be a little bit careful here about the 29, like I said. Well, I mean, we could, but we got a little support down to 29, so they could. I mean, you don't want to sell it here. If you wanted to sell it, you wanted to sell it above at our first resistance area or someplace up there. I mean, you know, they could easily continue to go down lower, right? But if you were trying to find a place to sell it, you probably wanted to sell it at. Well, I mean, yeah, but it's not worth it to sell it at 30 and to buy it at 29. Is the point? Okay. So I would rather use a support level before I'd use a sell through looking for support at 29. Now, it could run through the support, absolutely, but we don't know. I mean, if you knew, you should tell me. I mean, right? It went down here. So it's one of those things that, yeah, I should have known. I shouldn't have bought the 20. I'm giving you a warning that maybe it's a little risky, right? Because we got down here now to 30.75. So if you don't want to buy the support level, that's fine. But to sell it here, I think is riskier than to buy the support at 29. So that's the balancing act that you have as a trader. What do, right? Because if you sell it here, and then you get this rotation like it's happening, you get, okay, cool. As long as we agree. As long as you understand, that's more important. All right. So again, looks like there's a little support here. Again, we came down. We made a new tick low here by a little bit. So be a little bit careful there, even more now with the 29. I'm just saying, it would have been nice if we, this last little push here, we got 29, and we're still on the same bar. We could. So maybe we get to the next bar here and the close of the next bar, then it's a little bit even more tenuous. I would probably be looking at 20 as a better area. This is what I'm talking about by picking your spots, being patient, understanding the price action, then making a determination on your own. And what we try to do here is we try to explain the price action to you so you can make those determinations in our education course that we have. We do have a number coming out here at 9 o'clock in about a minute. Consumer sentiments coming out. Could be a little bit of a market mover, especially these days, considering the market is driven by consumer appetite. So there's a number on top of the fact that we're coming down here to our pivot area, our 29 area. We don't like to trade when numbers are out, so it's definitely on that verge, and the numbers coming out here in less than a minute, so be a little bit careful. It could be a little bit of a market mover given what's going on. So consumer sentiment is coming out here momentarily. And as far as any other news is concerned, there's nobody talking, and that's about it. So, it's enough, actually. It's kind of enough, if you ask me, but what do I know? All right, so we're going to come down here and See what it wants to do. Again, remember, we have a number. And of course, amazing. I've got 30, and it goes down to 30.25 and stops. Well, now I'm canceling my order. I'm not having anything on it. Like I said, I don't like to trade numbers. Too many bad stories with numbers. I can see it's a little bit volatile, and the number is out, and they took out that 500 lot. Okay, because now going to test the 29. Again, if you're going to, I explained the risk, so you have to, decide on your own whether you want to take it or not. You can see it's kind of working. The level is important. I mean, got down to 32, then 30, and now here 28, 29. Looking at 20 area. Obviously, the consumer sentiment number wasn't that good. I'm looking at the 20 area as our next support level that we have. Again, whatever the situation is, make sure you keep your stop in place, because it's not worth getting caught on one of these moves in case, completely wrong. All right, coming down here now to the 20 area. Again, there's a little volatility here, so be a little bit careful. Then that's trading off of the number as well. All right, and if you don't want to trade that number, it's still in that same bar as the number. So again, that's why we don't like trading numbers. It's not our favorite thing to trade numbers, but like I said, it's coming back up here, giving you reasons if you got in. Maybe you got in lower end, giving you a chance here to get out if you did get in. You don't like the volatility and you don't like the action. If you did get in a little bit lower, then maybe you just get out. Okay, let the market react to the information that's being delivered. And again, this is why we don't trade numbers, because we never know which direction it's going to go. And if you did trade it, it gave you a chance to exit if you didn't like the price action. Again, if you think I'm not trading with you, I am, because I got out. I was in, then got out. And just not worth the risk for me. It gave me a chance, and now I'll just wait. Obviously, sometimes we need the numbers to get you to a level, to get you triggered. Now I'll look at the 10 level next. Obviously, it's market is not happy. Consumer sentiment number probably was bad. I mean, how's the consumer sentiment not bad considering what gas prices are, right? Just saying. So let's see here. 10-year yield is trading at 302. The 30 years is trading at 312. Only 10 basis points difference. Anything inverted? Some of the stuff is being inverted. All right, market continues to slowly downtick here. The next support level we have is down at the 10 area. All right. Again, we're still on that same bar as the number is being released. So again, how do you trade a number? Do you wait for the bar to close? Or if you do have, if it goes down to a level or up to a level, then make sure you trade it and see how the sentiment is doing. If you get that reaction or the bounce that you're looking for, great. If not, gave you a chance to exit, then exit. I mean, that's depending on your risk tolerance, right? I mean, is it worth, taking it in and getting stopped out if I don't like the price action? So those are things that you got to consider as you're trading. Okay, so it's just that the market is just under pressure. Let's just put it that way. It doesn't mean that it's a free fall to the downside. It's just you gotta just trade it. Sometimes I would like trade in a day, and I'd be in and out of the market, and I honestly wouldn't be able to tell you. Obviously, these days it's a little bit easier to say which way the market's going. But I would be trading some days, and I didn't even know if the market was up or down. You know, but because we're trading electronically, and everybody has screens, and everybody has charts, and everybody can see what's going on, you obviously can see which way direction the market's going. But I remember when I was trading on the floor, I mean, I was just trading, buy, sell, whatever the market was giving me, I was taking, and that was about it. Worst consumer confidence in history. That was the number. History, but that was the number that was out. Not good. Obviously, it makes sense that it was bad, right? I mean, how could consumer confidence be good right now? So we got down there to 13 and change, and pop back up here. So again, because of volatility, be a little bit mindful of where you're at with our levels. And we're obviously not going to be perfect, so it happens that we can miss it by a little bit. If some of you are trading, we'll come down here to the 10 area. Gonna work this 10 area here a little bit. And if it's marked as a little bit too swift and a little bit too risky, then just sit aside. Obviously, come down here to 10, kind of hang in here for a little bit, see what it wants to do. Again, it's risky, but how you lessen the risk is how what's important. Okay, if you're trading 4 or 5 lots, maybe you trade in 1 lot. Maybe you enter a little bit less than that. Maybe you, not trade at all, right? There's no reason that you say that you have to trade at any given moment in time, right? You just have to understand the risk and then adjust your trading to the risk. Yeah, and the market's here giving Apple a chance to either get out of some of this, to take a little bit of a profit if you don't like the price action, right? But it's hanging here on the 10 area, as you can tell. So it's giving you a little bit of a profit. And if you want to just, get out a little bit now or exit at a sum, or depending on how you scaled in. Right, I mean, it's giving you a little bit of a return here against the 10 area. I mean, the 20 area didn't give us any chance. At least here you're working it, you're getting something, and it's been here a while too. So, and yeah, at the very least, it's giving you a chance to scratch it if you don't like any of this stuff. All right. Definitely different way of and when it traded here on the 10 than it traded at the 20, right? You can see the difference. It's definitely stagnant. Kind of came here. It stayed there a while. It's not running through. So even if you got in after the fact, but which I don't really suggest doing it after the fact, it's not, but that's another story. But you can see definitely there was definitely a different way of, and then how you entered also, you could have gotten a little better than 10, only because the market did not run through like it did on the 20. The 20 was a little bit more obvious. But here we kind of hung, traded there, gave us an opportunity to make a little bit of money on this trade. And it really didn't it gave you a chance to scratch if you didn't like it. But definitely you could have gotten in a little bit less than 10, got down to 7.25 there, maybe you got in at 8. But you definitely got a nice little rotation here off of that area. And the risk was definitely different than the 20. I think you can see that. But again, every trade's different. Every level's got its own little dynamics, But either way, I had my stop in place, so it didn't really matter. And then once you have your stop in place, then you can see how the price action is, and you can react to it. And if anybody has any questions, feel free to ask in the chat. I'm kind of working through some of these orders here. The market obviously is a little bit nervous with regards to interest rates. And the next support level we have is down at the 38.95 area. All right, we can see here the market is kind of trying to, it's on the lows, trying to do nothing. The next support level we have is down at the 38.95. Now, somebody asked about a bear market. Officially, I think as far as the 20% range thing is concerned, I think we have to close below the 38.60 area. I thought it was 39, but I think it's 38.60. So it's another, not too far away. But that, I think, is a level that the market bounced off of a couple times. Then one time did go below it, and then but closed above it. So it's teetering around that area. Teetering, I like that word, teetering. All right, so number came out, created some more push to the downside, and like I said, I can imagine that consumer confidence was going to be positive. That's for sure not. It wasn't going to be the case. But how much they were going to continue to push it down to the downside, obviously, they pushed it down to the downside. So, and now they're on the lows. Next level we have is down at 38.95. It's tough to stay short because they have some big rallies here. I mean, could try to stay short, but it's tough to stay short. These rotations in the market are big rotations. Where do you put your stops in with your trailing stops, so on and so forth. So, and that's why we just like to pick our spots and go from there. We don't have to worry about where market's going or anything like that. Hello there, Dan. We are trading mini S&Ps here, looking for opportunities to scalp the market based on the levels we gave out early this morning, in addition to price action opportunities that occur. Right now, we are definitely in a little bit of a sell-off here based on the CPI number that came out, and then followed by the continuation of the consumer confidence number. It's created another push to the downside here. Support level A was down, like I said, at the 38.95 area. All right, we continue to downtick here. Next support level A was down at the 8.95 area. Again, if anybody has any questions, feel free to ask in the chat. Right now, we've got some resistance up around the 30 to 35 area. well, definitely some pressure here. Back on the lows again. Good resistance is up at around the 30 to 35 area, but again, depending on how aggressive you want it to be, obviously that 10 area earlier held, so maybe that would have been resistance coming back up. Again, everybody has their own risk tolerance. I'm giving you like safer entry points if that's possible these days. All right, a little pop up out here. Again, we got resistance around 30 to 35 area. Again, be careful, be patient, wait for opportunities. I know 30 to 35 is a long way away, but uh, that is better than kind of guessing here. And again, everybody has different risk tolerances. There was some at 10, there is some here at 15, there is some at 20. All depends on how much risk you want to take. But you have to, find your risk and scalp it accordingly. Well, that's that's not that's good. If that's what you're up to. Everybody here, like I said, and I keep saying that we all have different risk tolerances, and how you enter and exit, how you scale in, how you scale out. So, depending on how you trade, and everybody here again does it differently. And if that's what your goals are, then that's fine. You obviously have to adjust your entry points and scaling in a little bit to make it happen. And as long as you're comfortable with it, that's fantastic. Again, we are a little bit tighter here. We're right now we're looking at about 7 points on our stops and our targets. And again, that could tighten up depending on volatility. But we're also trading a little bit more probably than you. We're looking at maybe 4 or 5 trades a day, and looking at probably just trading the morning hours. We don't like to trade the afternoon with the dynamics that we have in our methodology. We kind of focus more on the morning hours to scalp versus all day. Sometimes the market kind of sidewinds for most of the day and doesn't really give us too many opportunities. All right, again, we talked about resistance at different areas. We talked about some resistance at 15, now at 20. You can see here we stopped off at the 20 area and then came off. The resistance that we like is between the 30 and the 35 area. Again, whatever the situation is, keep your stop in place. We had support down at, our next support level is down at the 895 area. All right, market bouncing off here a little bit. Again, we talked about different areas depending on your risk tolerance of how you're scalping and what you're looking at and how many trades you want to put on. And obviously, when the volatility is there, there's more opportunity. But you also have to keep your stops in place because we're scalping. So you're in and out, looking for opportunities. And if you made enough money or if you had a nice trade this morning and you're happy with it, it's good. There's always a Monday, right? Always the next day. The key to trading is to always understand is you have to come back the next day. That's the key. You can remember that, you'll be okay. Because we can get blown up one day and lose money, but got to make sure we come back the next day. Always important. Right, again, the 20 area did hold very nicely. In case you were looking for an area there to maybe short and scalp. Again, they're different. There were different levels, areas, depending on what your risk tolerances are. It's always important to understand that, and that's why we uh, give you different areas, and all the areas are dependent on your risk tolerance. You have to decide which ones are the ones that you like, and to trade them accordingly. I mean, the areas that I said were part of our work. You are supposed to, in our education course, you're just supposed these areas you're supposed to find on your own, understand why they're there, and also know where your stop would be, and then trade it accordingly based on your risk tolerance. So I don't give out every trade that's out there because it's not right. It's not right to people taking the course. But at the end of the day, my goal here, as far as teaching you what to do here, is to find these opportunities on your own and then trade them accordingly to your risk tolerance. Because one time I'm not going to be here. Someday I'm not going to be around. So you got to be able to do this on your own. Can only tell you so many stories. And Don was out of here early today. What does that tell you? All right. Rotation up here. Again, we got a resistance around the 30 to 35 area. Anything above 40, you want to be out of any shorts. All right, we'll get back here in a bit.
Hey, Kurt, do you have any questions about our services? Let me know back in chat. Hey, Anupam, how are you? Jason, let us know if you want to hear about Sal's trading education. This is the Trade Along Trading Academy. This is the Trade Along Trading Academy's Trade Along service. It's on from 9 a.m. to 12 noon on a daily basis, with the action of the trading happening between 9:30 and about 11:30. If you're not signed up, take a moment to sign up. I'll send you out the sheet. Here are the links to sign up. TradeAlongLive.com, and live.com is the link to come in. Hey, Fred, how are you? Hey, quick sound check for Fred. You should see a series of 3 charts in a separate chart window, 2 time frames for the S&P 500 E-mini and a 30-year bond chart. Join us at TradeAlongLive.com.